Hello, fellow Rebel Capitals. Hope you're well. So, we've got more inflation news out today that shocks the market, or at least catches them off guard. But what's weird is how the market responded to this surprise. And I'll let the cat out of the bag, the surprise on the upside with the most recent inflation data. And I'm not talking about the CPI, we're talking about the PPI. More on that in just a moment. And then we've got big moves in the 10-year Treasury yield that I think is telling us a lot about what the bond market is expecting with inflation in 2025. And then we've got new Trump tariffs. He signed all these reciprocal tariffs into law today. So we'll see if we can go over to CNBC and get some details on exactly what is happening, try to think through the ramifications. All right, first and foremost, let's start with CNBC. And the PPI, producer prices or producer price index, rose 0.4% month over month. Now, this was compared to the Dow Jones estimate for 0.3. So we had a surprise to the upside. So you could call this hot, just like the inflation, just like the CPI data yesterday. But what's interesting is the market said, okay, that's a surprise on the upside, but we actually think that this means we're going to have less inflation than we thought just yesterday. Gets a little weird here. Check this out. Key talking points. Producer price index increased by a seasonally adjusted 0.4. Estimate 0.3. Like we said, stock market futures moved slightly higher following the release while Treasury yields fell. Kind of giving away the surprise there for the second topic, but there's a lot more details there. Wall Street strategists said the report suggests slightly more benign inflation picture, even though the PPI data surprised on the upside. The gauge of wholesale prices rose more than expected in January, though some details of the report indicated that pipeline inflation pressure is easing. Okay, so let's get into it here, guys. Give us the deets. Stock market, okay, got that. Wall Street strategists cited details of the report, okay, benign. In particular, the healthcare showed easing. Physician care fell 0.5%. Also, domestic airfares declined by 0.3%. Brokerage services were off 2.2%. So at surface level, it seems as though interest rates should go straight up, just like they did yesterday. But then it sounds like when you look beneath the hood, it's like short term, okay, this means more inflation, but maybe over the midterm, this is giving us an indication that maybe the CPI is peaking out here at 3%. Now, I know that understates inflation. I get it. We're just using that as a proxy. Why do we pay attention to it? Because we can see a trend, and also because this is what the market pays attention to. While the producer and consumer price index releases are wildly cited inflation gauges, they're not the principal ones Fed uses. Rather, the central bank focuses on personal consumption. So PCE, which the Commerce Department will release later in February. The PPI, and again, the Fed says that they go on the PCE, but do they really? Probably not. I mean, just because they say they focus on this doesn't necessarily mean they do. Putting data together, the core PCE measures likely will show a 0.22% increase, down from 0.45. Yeah, and that's what I like to put a little more weight on, is the month over month. It's not so much the year over year. I mean, the year over year have a lot of base effects and whatnot. I like to see the trend month over month. That's why, to me, the big number yesterday wasn't the fact that we've gone from 2.4% up to 3%, but it's more so that the market was expecting 0.3 month over month, and we got up to 0.5. And again, referring to the CPI. Here's a quote from Elizabeth Renter, senior economist at Nerd Wallet. Wholesale price growth came in slightly higher than expected in January, and the read for December was adjusted upward. Okay. In other words, inflation at the producer level remains high. And one concern is that this inflation could ultimately be passed on to the consumer. Revisions to the December numbers will also complicate the inflation picture. January producer prices for services increased 0.3, goods 0.6. Services were led by a 5.7% jump in traveler accommodations, which the BLS accounted for more than 1/3 of the gain. On the good side, and we're going to actually get into this in a moment, 10.4% surge in diesel fuel costs was a significant factor, but overall gas prices are going down, way down. In fact, the point where Chevron just laid off 15 to 20% of their workforce. So you try to project out 6 months, although it's impossible to predict with accuracy or with complete accuracy, and there are no certainties, there are only probabilities. But man, you got to look at Chevron just taking the hatchet to their workforce, along with a lot of other things, and say, boy, is the CPI number going to continue to go up and up and up and up? My base case would be no. I've said this. In fact, I get a lot of things wrong, obviously, on this channel. When you do thousands and thousands of videos and just right off the cuff, just give your opinion, you're not going to be right every time. But one thing that I absolutely pegged was inflation. I mean, I was talking about inflation going up in 2021. And then in 2022, I started talking about disinflation. And I'm saying not just talking about it in my videos. Actually, that was George Gammon's prediction. And then once the CPI got down to 3% or so, I was like, you just probably be in a range, because you got to think about what caused the inflation to begin with. You can say it was massive money printing or whatever it was, stimmies, velocity. And then, of course, it was the government locking everyone in a cage and destroying global supply chains. So you have more aggregate demand with the people with a higher propensity to spend, for velocity up, obviously. And then you combine that with a whole hell of a lot less stuff. And what do you expect to have happen? You're going to have consumer price inflation. But then you look, when we hit 2022 and 2023, you say, okay, is that still in the system? Are we still on a trajectory up? And the answer was no. So everything that led to it was pretty much flushed through the system, and the prices went up to that new level. And then we just kind of started to trend slightly higher. And that's when you saw the disinflation, meaning that we didn't have deflation. A lot of people always, what are you talking about? Prices aren't going down. Damn it, George. Have you been to the grocery store lately? Yeah, I get it. I get it. I'm not saying this. When I talk about disinflation, or when anyone talks about disinflation, we're not saying that prices are going down. No, prices will never, ever, 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 ever go back down to the, maybe asset prices will, but consumer stuff, those, you'll never see 2019 prices again. But if prices are increasing by 5% now, let's say, and they were increasing by 15%, that's disinflation. The prices are going up at a slower pace, you see. So again, the base case, I don't, because when you look at what caused it, you project out to 2025, you say, are we going to have that again? Are we going to have a complete destruction of global supply chains? I don't know. Maybe the tariffs do that, but probably not. Then are we going to have massive amounts of stimmy checks go out, trillions and trillions of dollars to increase that velocity? Maybe. But the only way that we would likely have that is if we had a recession that in and of itself would be disinflationary. So I think we just stay in this range between, I don't know, low twos and 3.5, 3.6, something like that. And that's what I've said for the last, I mean, you guys know that watch my videos. I've been saying that for probably a year and a half. That's kind of my base case. We've got to get a big catalyst. Now, I think that the CPI number could go below 2, but we need a recession. We need a collapse. We need a black swan, something. And then I think it can obviously go above 3.5. But in order to do that, something would have to significantly change. Like, as an example, maybe these tariffs do completely break down global supply chains again. And therefore, you have a supply shock. Okay, well, that would do it. Or, I mean, I don't know what the hell Trump's thinking, but maybe he just signs an executive order giving everyone 10 grand or something. Okay, that'll do it. That'll take the inflation up for sure. But it's not just the fact that we had all this money printing, which is what most people think, right? We had all this money printing, and therefore we're just going to have another decade of inflation. No, because even when you look at the 5 years prior to the GFC, I think I talked about this on yesterday's video, you see that the money supply growth was very similar to the money supply growth that we've had since 2020. What we've had in aggregate now, that 1 year was definitely unprecedented. But when you look at the total of the 5 years, it's pretty much right on cue. And to give you exact numbers, I know them right off the top of my head because I used them in the whiteboard video this morning. From the 5 years prior to the GFC, we had 30% M2 money supply growth. And since 2020, we've had 38%. So 8% delta. I don't know that that really takes us into the next wave of hyperinflation or the 1970s. Fantastic news that you're not going to have to suffer through another round of 10, 15, 20% price increases annually, at least probably not in 2025. Oh, now look at this. Breaking news. I didn't see it. So now I was going to talk about the Trump tariffs. They're kind of going back and forth here because I also have to talk about the 10-year Treasury yield. But look at this. Dow jumps 300 points as Trump holds off on new tariffs. What? I thought he was just doing a press conference right here. Trump signs sweeping reciprocal tariff plan. That's what I was going to go over right now. Well, let's read this here. What's happening? Let's go through this in real time. Okay, stocks rose. We got that. Blah, blah, blah. Dow hit intraday high. Okay, we get that. After President Donald Trump signed a presidential memorandum to examine reciprocal tariffs, but fell short of implementing any levies. Ah, I see. He also suggested that additional tariffs, including on auto imports, are on the way. But that's what he said about this. Well, I got to give him credit. If he is using this as a negotiating tool, and I'm not just talking about tariffs, I'm talking about the fact you never know what he's going to do. He could sit there and say that tariffs are coming, then he implements them. And then he could say tariffs are coming, and the very last moment he said, oh, yeah, actually, we decided we're not going to do the tariffs. We're going to go ahead and hold off. I don't know how people that really are just hardcore MAGA folks, that Donald Trump can just absolutely do no wrong. I don't know how they really follow this. And it's not a knock on them. I'm just curious. I don't know how, like in their head, they're like, okay, we have to have tariffs. We have to have tariffs. And these tariffs are going to make us rich because it's going to bring all these high paying jobs back. And I believe you, Donald Trump, you're going to make America great again with tariffs because it's going to bring back all these high paying jobs. And then he does some tariffs and then he pauses the tariffs. And then here he says, well, maybe we're going to go ahead and research maybe the trade-offs with these tariffs. And then the MAGA people, at least some of them, are like, yeah, good job, Trump. You're using that as a negotiating tool. And it's weird that you would think that they would be mad at Trump because why are we waiting to make us rich? Like, if the tariffs are going to bring back all these manufacturing jobs, why are we waiting to do this? Like, shouldn't we be doing this right away? And again, if all these trade policies that we have with other countries are so unfair, we're getting a raw deal, right? I mean, these are reciprocal. So if XYZ country is putting a 25% tariff on us, why the hell aren't we putting a 25% tariff on them? And now I'm not saying that we should. I'm just saying looking at it through the lens as tariffs are just the panacea, the silver bullet. I don't know how you reconcile all this stuff. And again, it's not a knock on anybody. I'm just curious. I'm very curious. So let's try to get some details here. I'm just spitballing. The Dow hit intraday high. Okay, we got that. Signed a presidential memoranda. Okay, let's click on this. So key talking points. Trump held Oval Office news conference. That's where I thought he's going to announce everything. And that's what we were hearing in the news all this morning. Trump had teased the event in all caps on Truth Social. Yeah, and I think I read the Truth Social thing, and it was like, tariffs are coming. We're going to get you. We're getting them. And then an hour later, it's like, nah, not really. The fresh tariffs do not go into effect until some months later. Okay. I don't know why. Why are we waiting to get rich? Don't we want to get rich like right now? President Donald Trump on Thursday signed a presidential memorandum. Okay, got it. They charge us a tax or a tariff, so we charge them. Okay, but maybe he's playing 3D chess here, and I'm not seeing it. But if this is what we need to do, I mean, let's do it, right? Why are we waiting months to do this? I mean, you could say, well, maybe he's giving, I don't know, the U.S. manufacturers time to ramp up production. Maybe he understands that this could disrupt global supply chains, and he doesn't want to do that. So he's just using this as a negotiating tactic and then kind of easing his way into it when the supply chains can adjust accordingly to where it doesn't impact the amount of goods or services that we have in the United States. Maybe that's it. Let's give him the benefit of the doubt there. We want a level playing field, Trump said. He also suggested that additional tariffs, including on auto imports, are on the way. See, again, I don't know. It's just hard for me to put a lot of weight into anything that he says, because it is true. Some of the things that he says, he absolutely takes actions. And he's taken more action in his first 4 weeks than probably the past 5 presidents put together, excluding him. And so hats off there for working hard and basically, making it happen. But again, you just never know, if he says 10 things, 5 of them, bam, done. The other 5, it's like, it's very similar to Elon Musk in that, he'll sit there and tell you whatever. Oh yeah, we're going to dig a tunnel from San Francisco all the way to New York City. You're like, what? Or you're like, oh yeah, we're going to have, remember all the autonomous taxis that we're going to have? I mean, he was talking about that like 5 years ago. Oh, what's your time horizon for that, Elon? Oh, probably 6 months. In 6 months, every car in California is going to have autonomous driving. What? What are you talking about? And then he's going to, do all this crazy stuff. By the way, where's the Roadster? I don't know. I don't know where the Roadster is. Where are all the semi trucks? I don't know. But then on the other hand, he's putting people on the moon and he's doing all these incredible things. So it's like he'll say 10 things. He'll only do 5 of them. The other 5 are complete BS. But even with the 5 things that he says he's going to do that he does is 10 times more than other people accomplish. So it's not really a knock. It's just a statement of, I don't know how to process that. But, anything that Trump says, I don't know how to, I guess, consider that in my analysis, because I don't know the probabilities of it actually coming to fruition. I think that's probably the best way to say it. So what he has done so far, just to be very clear, the new tariffs will follow, and when are they going to come? Who knows? But the new tariffs, assuming they do come, are going to be slapped on top of the tariffs that we do have that he's implemented. China, well, he hasn't really done it on Canada and Mexico because he paused that one as well. So I think the only thing that he's done, you guys can correct me if I'm wrong, is just 10% on China. And then he also had some steel and aluminum tariffs that may have impacted Canada and Mexico. Maybe that's why they're referring to those two countries when with all the other stuff, he paused it with those two countries specifically. But he also advocated for Congress to pass what he called the Trump Reciprocal Trade Act, which would empower him to slap tariffs on the goods of any country that has higher tariffs on U.S. made goods. I don't know why. It doesn't seem like he's been needing Congress to do that so far. Since taking office, Trump has signaled his plan to impose tariffs on the European Union. He has highlighted U.S. trade deficits with European partners and complained the EU do not purchase enough American cars or farm equipment. Okay. I mean, it just goes back to I don't know. I don't know what to take seriously and what to not take seriously. And maybe that's what Trump's trying to do. Honestly, maybe that's his tactic right here. Now let's go over to the 10-year Treasury because we had some big price move there, interest moves that I think we need to pay attention to. So let's zoom in. And yesterday, as you guys remember, if you saw the live stream, we were talking about this huge move in the 10-year Treasury. Went up by, I think, intraday, 10, 11, 12 basis points, which is a big move. And then it kind of, actually, let's just do a 5-day chart. And you guys can see what I'm talking about. So we just boom, straight up when we got that CPI report. We started 4.53. And we shot straight up to 4.65. Yeah, so 12 basis points. And then toward the end of the day, we kind of came back down to where we settled a few basis points lower at 4.63. But then what happened is the PPI report came out today. And I think also the market has had time to kind of digest the CPI report that we got yesterday and determine whether or not this, really what the probabilities are that this means we're going into another 1970s, or if this is more just noise, which it very well could be. And then you get this, what I think, and look at this, we're actually down below where we started yesterday prior to the hot CPI report coming out. So this is, if you look at the 10-year Treasury yield as inflation and growth expectations, which I do, and over the short term, there's a lot of noise. Sometimes it's right, sometimes it's wrong. I mean, look at how wrong it was in 2008 for a period, right? I mean, between March and June, July, the 10-year Treasury yield went up by 100 basis points. That was in 2008 when we were right in the middle of the worst recession, disinflationary, deflationary recession since the Great Depression in the 1930s. And while we were right in the thick of that, the 10-year Treasury yield went up by 100 basis points. So obviously it didn't get that one right, but usually what you see over the long term and the trend is correct, although you get a lot of noise in there. But the one thing we don't want to do is completely ignore what's happening with the 10-year Treasury or with the entire yield curve. That's what you don't want to do. We don't want to just, poke our head in the sand like an ostrich and say, oh, well, this, the 10-year Treasury yield was wrong this time, so forget it. I'm never listening to that indicator again. I think that's a bad move. So looking at this for what it's worth, and again, this isn't the be-all, end-all of the analysis. It's just something to include into your thought process. It's got down at 4.51, which again is 3-4 basis points under where it was prior to getting that hot report yesterday. I'm going to be very curious where the 10-year Treasury ends the day. I mean, could we end sub 4.5%? And then actually, let's zoom out a little bit to give us some context here. So we were, obviously, this is when the Fed started cutting rates. And this is actually what I was talking about yesterday with Brent. That video is going to be live today, that interview on the other channel. And that, a lot of people are saying, well, we've got this increase in inflation from 2.4% up to 3% because the Fed was too loose, right? Because we didn't have restrictive monetary policy, using air quotes again. But I don't know that that's true, because I would argue the 10-year Treasury yield is far more important in the real economy than the Fed funds rate. And if Fed funds rate goes down by 100 basis points and 10-year goes up by 100 basis points, is monetary conditions, or are monetary conditions tighter or looser? I would argue they're probably tighter on balance, where most people just get hyper focused on the Fed and they're like, oh my gosh, they're loosening monetary conditions. Well, it depends on the entire curve, not just the front end. So now let's go over to, actually, I'm curious to see what Zero Hedge is saying about these tariffs. I know we're kind of jumping around on today's live stream, but that's okay. Here we go. So let's see, because a lot of times Zero Hedge gives some more insights above and beyond just what we see on CNBC. And I still have a lot of questions. Like I'm still trying to figure out what's going on here. As reported last night, Trump has officially signed an action on reciprocal tariffs targeting all countries around the globe that have higher tariffs. Okay, yeah, but they're not, I don't think they're put into place. It appears that Trump has picked reciprocal in place of, okay, got it. That's just a start, however. What is more important is that, as we cautioned earlier, the U.S. appears set to retaliate against Europe's VAT. Okay, but yes, just because you signed something and said, yeah, I'm signing this, so you better watch out. Now, I'm not implementing it, but I'm signing it. I don't know. Again, I don't know how to game that. I don't know how, what does that even mean? Does that mean that you've taken a step forward, or that we're still at the same place? I don't know. He announces reciprocal tariffs. Okay, we're talking about VAT. Okay, I get that. Let's just focus on, okay, more VAT. And then Trump is told reporters that he would enact import taxes on cars, semiconductors, pharmaceuticals, in addition to reciprocal tariffs. Okay, but again, he's talking about all of this stuff, but what is he actually doing here other than just signing documents? Yeah, so Zero Hedge, yeah, I don't know why they did that, but maybe CNBC is wrong. Maybe he did sign them and they are in place right now. Right here, well, I'm just rereading this to make sure I'm getting it right. The fresh tariffs not go in, nice typo, CNBC, come on. The fresh tariffs do not go into effect until some months later. Yeah, so I'm going to have to see how this plays out tomorrow, because, I don't know why Zero Hedge isn't including that, although it's kind of counter to their narrative. But I think this is really important. And again, you have to wait till tomorrow's live stream to really see how the dust settles here. But I'm very curious. I get he signed something. There's no disputing that. But what did he actually sign? Did he sign tariffs that are in place now? Or is this just sometime, we don't even know what month, just sometime in the future, which to me doesn't really move. It doesn't mean anything. All right, a lot of stuff going on. I mean, this is staying true to what I thought at the beginning of the year, that 2025 we would see just massive volatility, crazy things happening. I said there's never going to, I don't know what's going to happen. There's more unknowns than I have ever seen, with the exception of the cerveza sickness. But I can assure you of one thing: never going to be a dull moment. And 2025 has played out that way. That is one prediction that I definitely got right. All right, on that bombshell, if you guys want to participate in the coal webinar I'm doing, we're very excited about that. We're going to be doing a deep dive on coal for Rebel Capital's Pro members, and you can sign up for a $1 trial to have access to that at georgegammon.com/pro. I think Josh just put it up. There you go, Josh. And that's going to be Friday, 5 p.m. Eastern time. I want to go kind of over a macro view in that webinar for commodities and energy in particular. And then I want to go over some specific companies that I know Chris McIntosh has, out of all the pros in Rebel Capital's Pro, Chris McIntosh is the one that focuses most on commodities and coal. And so I want to go over some of his picks, some of the things that he's buying for his hedge fund and why. And maybe we can get, I don't know if I'll get into the balance sheets, but I actually want to go over his rationale for why he's buying X company as opposed to Y company. And then we're going to talk about a lot of the macro stuff. So this is a webinar you're not going to want to miss. You can check it out again at georgegammon.com/pro. And as always, guys, enjoy the rest of your afternoon. Make sure you are standing up for freedom, liberty, free market capitalism. And I will see you on the next video, which is going to be in a couple hours on the Rebel Capitalist interview channel. I'm having all these call to actions here. Let me go ahead, because today we're uploading an interview that I did with Brent Johnson. If you didn't see yesterday's interview with Jeff Snyder, you really missed out. But Josh, can you put that up there? I don't know why. Oh, I had it on the clipboard. I don't know why it's, let me do this here. There we go. Now I got it. Okay, it's going to be in the chat, guys. So right now, look for it there. Boom, you got it. So it's just not in the algorithm yet. And once we upload a few more videos, it'll actually be searchable on YouTube. But until that time, you're going to have to go straight to this link if you want to see that interview with Jeff yesterday and the interview we're publishing today with Brent Johnson. We're going to be talking to Patrick Sresna on Friday. Oh my gosh. Next week, we're going to be talking to Greg Manarino. Yeah. Talk about never a dull moment. That's it. Oh, and Gerald Salente as well. So we're really going to have some fire next week. All right, guys. We will see you on the next video.